Welcome to Trading an Edge, the deep dive, where we break down the psychology, mindset, and system of elite trading. Today, we're hitting on something that, well, might feel a bit uncomfortable. It's a core truth in trading. You see, the most dangerous belief isn't actually thinking you're a bad trader. It's thinking you're good enough, your biggest threat. It's not that huge loss you dread. It's complacency, that quiet, almost cozy feeling.
It's insidious.
Exactly. It can really erode your discipline, often hiding behind, a few small wins. So today, we're dismantling that myth, the idea that just executing trades is sufficient.
Because it's really not.
No. And we want to reveal why this relentless self-review we're talking about, why that's the real path to mastery. For this deep dive, we're looking at excerpts from The Art of Trading Self-Review and some personal notes from logsic 225-0810-210-3805.txt.
And what's really interesting when you look at it is that the core idea feels almost clinical.
Clinical? How so?
Well, think about it. Every trade, every single decision you make, every outcome, win or lose, it's all data, just raw data points.
Okay, I see that.
And the real edge, it isn't just locked up in your system, your strategy.
Yeah.
It's in your ability to clinically, ruthlessly dissect that data.
Ruthlessly? That's a strong word.
It has to be. Without that kind of honest self-review, you're basically just, well, flipping a coin, hoping things turn out better next time.
Right. Hoping isn't much of a strategy.
Exactly. So the path to consistency, it starts right there with the conscious, disciplined act of learning. From your mistakes, yes, but also from your wins.
So it's not about beating yourself up.
Not at all. It's about insight, pure, unfiltered insight that actually fuels real growth.
Reading through these notes, this idea of continuous improvement, it really jumped out at me. Does that mean there's just no finish line, like ever?
Yeah.
Or do you reach a point, a sort of mastery, where you can ease up a bit?
Well, the sources are pretty firm on this. They really frame trading as a journey, not a destination you just arrive at.
So always learning.
Always learning. You have to be your own biggest critic in a constructive way, a constant student, not just of the market, which is obvious, but crucially, of yourself.
It's an ongoing process then, refining your craft.
That's it. And it ties into a really crucial point for you, the listener. It brings up honesty. How radically honest are you prepared to be with yourself about your performance?
That's the tough part, isn't it?
It is, but that's where the growth happens. You've got to embrace that radical self-honesty because nobody else is responsible for your progress. It's all on you.
Right. Accountability.
100%. The material really emphasizes that every single day in the market gives you a chance to learn something valuable. But the only way you'll actually get that lesson is through relentless self-review.
Relentless. So it's not just a weekly thing or when you feel like it?
No, it's a daily commitment, not just some chore you tick off periodically.
Okay, so building on that.
Yeah.
What do the sources say is the real enemy here? The biggest obstacle to that consistent improvement?
Complacency. Hands down.
Back to that.
Yes. It's that subtle shift, where you start thinking, yeah, I know enough, or I've got this figured out. You feel like you've hit a certain level.
And that's dangerous.
Extremely. Because that's the exact moment you stop growing. You have to keep pursuing excellence in your review process, even if your execution wasn't perfect that day.
Even on winning days.
Especially on winning days, sometimes. It's this constant chase for better, not just being good enough.
Okay, that makes sense. Keep pushing.
And there's a great metaphor the material uses. It's pretty visceral.
Oh, yeah.
It says a trader without a review process is like a fighter who never watches their own fight takes.
Okay, I can picture that.
They just keep making the same mistakes.
Right.
Repeating the same bad patterns, never really understanding why they get hit or where their weaknesses are.
Yeah, they're blind to their own flaws.
Exactly.
Yeah.
And your trading journal, those notes you take, win or lose, that's your game film. It's the raw, unfiltered footage of your performance.
So you have to watch it.
You have to watch it, study it, learn from it, master yourself from it. It's a difference between just repeating actions and actually consciously evolving.
That's a powerful image, the game tape. But let's be real, watching your mistakes, your losses, that's uncomfortable.
It is, no doubt.
So how do traders get past that natural urge to just, look away from the bad plays? Do the sources talk about that?
They do. They dive right into the psychology. And the core message is that moment you avoid reviewing, maybe to protect your ego or just avoid feeling bad.
Yeah.
You're not actually protecting anything. You're creating a blind spot.
Yeah.
A dangerous one. And eventually it will sabotage you. It's almost guaranteed.
Wow. Okay. So avoidance is sabotage.
Pretty much. Mastery, the sources say, is responsibility. You can't outsource it. It's built in those quiet, maybe uncomfortable moments where you hold yourself accountable
But to what exactly?
to your principles, your rules,
Yeah.
your plan. Not just to your P&L for the day. It's about how you traded, not just whether you made or lost money on that one trade.
Great process over outcome in the review.
Precisely. And the material suggests reframing that discomfort. Don't see it as punishment. See it as the only path to real clarity.
Okay. So if we accept review is absolutely essential, what does it look like? How do we actually do it effectively?
Good question. The sources give us a clear framework for this relentless review. The key idea is structure, turning all that raw data, trades, decisions, outcomes into actionable intelligence.
Actionable intelligence. I like that. So it's not just navel gazing.
Not at all. It's about learning and adapting systematically.
Perfect. So let's break down that framework. What's step one?
Okay, step one, the foundation. It's called the daily postmortem review.
Postmortem. Sounds serious.
Well, it is, in a way, but crucially, this isn't just reviewing the trades you took. It's about dissecting every decision you made, all of them.
Every single one. Even the ones where I didn't trade.
Yes, every choice.
Yeah.
Did you enter? Did you exit? Did you hold? Did you stay out? Win, loss, break even? No trade. Everything needs to be examined.
Why so comprehensive?
Because if you avoid critiquing any decision, even small ones, you create those blind spots we talked about, and they will come back to bite you. The notes are really clear. Leave no decision unreviewed. It's about getting a complete picture of your day.
Okay, total review.
Got it.
So, after that comprehensive daily look, what's next? What's step two?
Step two builds on that. It's the two-way analysis. Basically, looking closely at both your winning trades and your losing trades, but with specific questions for each.
Okay, let's start with the wins. Why review wins so closely? Isn't a win a win?
That's a common trap. A winning trade doesn't automatically mean it was a good trade, execution-wise.
Right. Could have been luck.
Exactly. So you have to ask, could I have executed this even better? Maybe manage the trade for more profit instead of grabbing a quick win? Did I exit too early because I got nervous?
Or too late out of greed.
Precisely. Was the setup genuinely high quality according to my plan? Or did I just get lucky this time? Did I follow my rules to the letter?
And why is this distinction so important?
Because a winning trade you executed flawlessly. That reinforces good habits. But a win that came from poor execution or luck, that just masks bad habits. It gives you false confidence, which is incredibly dangerous long term.
Okay, that makes perfect sense. Masking bad habits with wins. Scary thought. Now, what about the other side, reviewing the losing trades?
Right. This is critical too. The sources frame a losing trade as essentially tuition, a fee you pay for a market lesson.
A fee for a lesson.
And the goal is simple. Don't pay that tuition twice for the same lesson.
Learn it the first time.
Exactly. So you need to ask, was this lost because my actual trading plan has a flaw?
Oh.
Or was it simply an error in how I executed the plan?
Why separate those?
Because the fix is totally different,
Yeah.
right? A plan flaw needs a strategic adjustment, maybe backtesting changing rules. An execution error is often psychological or procedural. Discipline, focus, following the steps.
Got it. Plan versus execution error. What else?
You also ask, were there warning signs I ignored? Did I miss something obvious? Or did I jump in based on emotion, fear of missing out, revenge trading?
The emotional stuff. Always tricky.
Always. And finally, was the loss just due to genuinely bad market conditions I couldn't avoid? Or was it my own poor mindset bleeding into my decisions that day?
That's a deep dive just on the losses.
Yep.
Okay, what's step three?
Step three is one people often skip, but it's hugely valuable according to the sources. The non-action review.
Reviewing when I did nothing.
Exactly. Reviewing the days you didn't trade. These days are apparently a gold mine for insights. The notes say it's a powerful revealer of your decision-making patterns.
How so? What am I looking for?
Well, sometimes the best trade is no trade, right? Discipline isn't just about acting. It's often about not acting when your plan says stay out.
True.
So you ask, was my decision to stay out based on solid logical discipline? Like I scanned the market, saw no valid setups according to my rules, and correctly stayed flat.
That's the ideal scenario.
Right. Or was it emotional hesitation? Was I afraid to pull the trigger on a valid setup because of recent losses or lack of confidence?
Discipline versus fear.
Precisely. The first shows strength. The second reveals a weakness you need to work on. Did staying out actually protect me from a bad situation? If yes, great, reinforce that discipline.
And what about mindset on those days?
Crucial. What was my mental state? Was I calm and objective? Or was there that nagging feeling that I should be in a trade voice that I had to actively fight off?
Yeah, that FOMO feeling, even when there's nothing there.
Understanding that tells you so much about the health of your discipline and your mental game, even when no capital was risked.
Okay, this is incredibly thorough. What's step 4?
Step 4 gets into something really fundamental. It's called the inevitable gap. Accepting imperfection, pursuing excellence.
The inevitable gap. What gap is that?
It's the gap between your perfect plan and your inevitably imperfect execution in the real world. The sources acknowledge reality. In the heat of the moment, markets moving, incomplete info, emotions flying, your execution will be imperfect sometimes.
So cut yourself some slack during trading.
You have to accept that imperfection during execution is part of being human. That's the acceptance part. You can't expect robotic perfection
Right.
live.
Okay.
But in the quiet reflection of your self-review, after the market closes, when you have time and clarity, that's where you must pursue excellence,
Oh.
relentlessly.
Okay. Accept imperfection in the moment, demand excellence in the review.
Exactly. The review is where you have the calm, the data, the perspective. That's where you sharpen the axe. You analyze the gap, figure out why it happened, adjust your system, tweak your psychology, and improve for next time.
So the real growth happens in the review, not necessarily in the live fire.
That's where you consciously engineer the growth, yes,
Yeah.
away from the pressure.
Makes sense. Okay, that leads us to the final step.
Yes, step 5, the master's scorecard. This ties everything together.
The master scorecard sounds impressive. Is it about P&L?
Actually, no, not primarily. The point here is that consistency is built through careful refinement over time. So instead of obsessing only over profit and loss on your scorecard,
Yeah.
you score your daily performance based on how well you adhered to your plan, your principles, your rules. Did you follow your process?
So grading yourself on discipline and execution quality, not just the dollar amount.
Exactly. Think of it like grading yourself on how well you studied and followed the exam instructions, not just the final mark. Did you do what you said you would do?
Regardless of the outcome of that specific trade or day.
Precisely. Because over time, by consistently refining your strengths, identifying and correcting weaknesses through this structured review, and constantly asking yourself better, deeper questions, that's how you build a truly robust, consistent trading edge.
It's a cumulative process.
It's compounding. Small improvements, consistently applied through rigorous review, lead to mastery, and ultimately the profitability everyone seeks.
Wow. That's a comprehensive framework. A lot to think about there. So wrapping this up, what does this really mean for you, the trader listening right now? It boils down to this. The trader who blames the market, they'll stay stuck as a student, forever learning the same hard lessons. But the trader who takes responsibility, who blames themselves not in a destructive way, but in a way that sparks analysis and change, that trader becomes a master. So the most powerful question you can ask after a trading day isn't just, what did I miss, tin it, it's, what did I ignore? What signals, what rules, what part of my own plan did I choose to overlook? Trading an edge where psychology meets profitability.